You know what you're watching. DS Learning Finance. Whoa.
You guys know JD Sports, the stock that I was talking about a few weeks ago? Yeah. Turns out they're doing really well, guys. And this is all because of the statement, the half-year statement report that JD Sports has brought, which has been really, really good. I've done you guys some favors. I've noted down but quite a lot of points, yeah? And most of them are really, really good, and it only speaks good things about the company. So, as you guys can see, there's a long list. So let's just get started, okay? First off is Peter Calgrove's statement, the executive chairman of JD Sports. Let me tell you what this guy said. The group continues to make excellent progress with a profit before tax for the 26th week ended 4th of August 2018, increasing by a further 19% to 121.9 million. The increase in operating profit of 20.6 million to 123.9 million includes a contribution of 4.8 million from Finish Line in the 7-week period post acquisition. Against a backdrop of widely reported retail challenges in the UK, it is extremely reassuring that the profitability in the UK and Ireland sports fascia has been further enhanced. Sales to date in the second half have continued at similar levels to those in the first half, supporting our continued confidence in the robustness of the JD proposition. We remain confident that we are well positioned to deliver an outturn in line with current market expectations, which, including the part year from Finish Line, range from 337 million to 345 million. And we also remain encouraged by our prospects for future growth. And then when you check this out with the revenue and gross profit that they had done this year compared to last year, you guys can really see why this company is doing so well. They have a revenue increase of roughly 35% from 1.4 billion to almost 1.9 billion, which is a massive increase. Their gross profit has also increased as well. It was before 47.4, now it's 48.2. It's only positive, guys. The profit before tax has increased by a whopping £20 million. That's a 20% almost increase compared to the previous year. Now I'm going to talk about the basic earnings per share and interim dividend payable, but I'm going to talk about it later on. But the thing that sort of really daunted me was, obviously they've got a lot of positivity going on, but if you look at the underlying, the total big sum at the end of the day, which is the net cash at period end A, they're in the negative. Yeah, a negative. Now, when I first saw this, I was like, okay, something's not right here. I shouldn't be investing in a company that's making a loss. But when you think about the whole perspective of things, it makes a lot of sense. Now, JD Sports Fashion has recently bought Finish Line. And they bought Finish Line, I think it was like $500 to $600 million. So convert that down, it was probably like 500 million pounds. So they've taken on a lot of debt just to acquire Finish Line. So that £5.1 million loss that they're making, that must be heavily weighed towards Finish Line. So in essence, that is a debt, yes, but it's good debt because that good debt has helped buy another company, which can also propel them forward. The next point I'm going to talk about is the growth. Globalization has increased by 4%. I know it may not seem a lot to you guys, but you got to think about this in terms of money wise. JD Sports Fashion is a multi-billion pound company. Their profits are hundreds of millions. The market cap is billions of pounds. So 4% of that is a lot of money. Yeah, so for them to increase 4%, and don't just think about it in terms of like 4% now, but think about it in the future. If they're continually increasing by 4%, you guys know compounding is a big thing. They're going to end up just literally miles ahead of their competitors just because of that growth rate, which is quite impressive. On to the next point, which is the Finish Line revenue and profits that was achieved within the 7-week acquisition. That's key. So literally just over 2 months of acquiring this big company in America has produced these results. They had £180 million revenue within that 7-week period, and they had £4.8 million profit. Imagine that, guys. That's what it produces just after 7 weeks. Yeah, it's looking really good. On to the next point, which is the next stock has increased by almost 100%. I'm going to read the statement for you guys. Net stocks of 824.1 million have increased substantially relative to the prior year, which was previously £414.3 million in 2017, principally as a result of stocks in the recent acquired businesses, including 270.3 million at Finish Line and 31.5 million at Sports Zone. So what this is telling me as an investor, as someone who's owned shares in JD Sports Fashion, is that this company, people are starting to pick up with it. So like other investors are starting to realize this is a good company, because like you guys can see, it has gone up. It's 824 million pounds invested in it. So other investors are investing twice as much as they did last year. If it continues at this rate, guys, the share price is just going to go up and up and up, yeah. That's all I'm going to say. It's looking positive. And this is all because JD Sports Fashion is now looking to venture out. They, like I mentioned previously, they practically own the UK. They dominate that market with the sportswear, footwear market. But now they're looking to globalize. They're looking to go further. They're looking to go to US and fight Foot Locker face to face. They're looking to go into Asian markets, European markets, and really, really push up that share price. Now, you guys are probably tired of hearing all the good stuff. Well, I'm not, but yeah, you can be. I don't care. But the bad thing was the outdoor business. So JD Sports has multiple, I would say, subsidiary companies below itself. One of them that they're looking to push forward is the outdoor business market. So they're looking to sell kind of like a North Face, kind of like I can never remember the name of this company. You know, the companies that sell clothing for, particularly for outdoorsy stuff, so particularly for harsh terrain, harsh weather conditions, where they'll sell like big puffy jackets, like fleeces, like underclothing to keep yourself warm. Those sort of companies, they're looking to venture into that market in particular. And they made a loss of £3.8 million. And the reason why this is happening is because of the recent months that we've had. It's been summer. It's not in winter or at least autumn. It's been summer, guys. So there's not going to be a high demand of that, because obviously most of the weather is hot. It's not really raining. It's not really snowing. So there's not going to be a need for customers to buy puffy jackets, for customers to buy big boots, reliable boots to go mountain climbing with. There's not going to be an emphasis for that. So as we obviously dissect this further, it makes a lot of sense why the company is not really making that much profit in terms of that. But what it does say is that, guess what time we're in now? We're in September. Give it a few months, we're going to be approaching that sort of weather, and I guarantee you this, well, I can't guarantee you anything, but I can pretty much say that this will climb up, simply because the demand is going to be higher for it. And who do you think is going to be right there at the front of it all? JD Sports, of course. On to the next point, which is the interim dividend. Now, this was the thing that I mentioned previously that I was going to talk about. Yeah, the interim dividend isn't really good, guys. Yeah, I think they decided to pay around late November, early December. It's now 0.27p per share. Just to give you guys an idea, that's not a lot at all. But it is an interim dividend, and 2, they're just getting started. And 3, when you buy shares in the stock, you don't buy it just for the dividends. You buy it because you believe in that company in the long term. You can see the vision of that company, and you believe that company is going to get to where it claims it's going to get to. So them having a 0.27p per share dividend makes me think, okay, it may not be a lot, but they've got a lot of room for progression. And relative to the previous year, it's increased by 4%, which is good, because you want to see dividends increasing, guys. You don't want one dividend to be 10% one year and then be like zero the next year. You want to see a steady increase, and that's what really will improve your compounding interest in effect. It's by increasing your dividends rather than fluctuating it. Also, the EPS, the earnings per share, has gone up. It's 10.05p per share now. This is a 24% increase compared to last year. Now that is massive. 24%, guys. That's big, because it's telling you that the company's just making more and more profit. And as mentioned previously, it's making the loss, obviously, because of all the debt from the acquiring finish line. But in the long run, it's just going to make more and more profit. I've got this to read out for you guys, just to put this into perspective. He continues to believe that it is in the longer term interest of all shareholders to keep dividend growth restrained, so as to maximize the available funding for our ongoing growth opportunities. And what this is telling you is that JD Sports have the money to pay a good dividend. They have the money. But they're using that money and putting it back into the company, using it to fund other things. And remember that argument that I mentioned in my previous video. What's the right or wrong answer? Should a company give you all of their dividends, or should a company use that money and redirect it back into themselves, or should a company do a combination of both? The truth is, you don't know what you want the company to do is to make the best decision for itself. If JD Sports is making the best decision by putting majority of its money back into itself, then I'm all for it, because in the longer term, that's going to benefit me. In the shorter term, it may not, but as a long to medium term investor, I'm going to be happy. And just to put the icing on the cake, look what JD Sports Fashion had to say about the globalization of their company right now. You can see that some of the increases from 2017 compared to 2018 has increased by over 50%. A perfect example of this is the rest of the world. If you look at the first table, it's gone from 64.2 million to 106.3 million. That's more than 50% increase, guys, in the past year. So this just speaks volumes that JD Sports, what they're looking to do in terms of branching out and dominate the rest of the world, because they dominate the UK, is a profitable, a very, very lucrative idea to approach. And it's obviously paying off in the long run, because now it's starting to make them more revenue as well. And it's all of these reasons that make JD Sports a good company to invest in. But JD Sports historically do best towards the latter half of the year, and in particular towards the festive seasons. So during Christmas period, that's when they tend to really, really rack up the numbers. And guess what we're approaching right now? We're approaching Christmas. So your boy is happy, yeah, because the company's doing well and it's still looking like it's got miles to continue in terms of progression and growth. As mentioned previously, guys, I was really shocked to find this out, and the main reason was because the night before the share price went up because of the half-year annual report, I talked to my girlfriend about this. I was like, babes, you know, like, this company's looking really good. Honestly, I'm happy that I'm looking at this company now. And next morning, share price just flies up. Everyone's going mental over JD Sports Fashion. And it's because the company's just doing so well. It's a big shocker, guys. Like, I know you do a lot of research to find out that a company is going to do well. But when you see it doing well straight away, like, it's just like, whoa. Like, I didn't expect it to blow up this quickly. And the fact that it is doing just speaks volume, not just about the company, obviously, because the company is really good, but also about my investment approach. So this long to medium term investment approach is good. It speaks for itself, guys. This is a clear example. And yeah, it's obviously the method I'm going to continue using, because it's seeming to do well for me. But anyway, that's the end of my video, guys. As you guys can see, I talk about stock market investments. I talk about property investments, like last week's one. Yeah, if you haven't watched that, naughty, you need to watch it. And also I talk about financial management, giving you that consistent content, you know. But before you guys can go out there and whatever you're going to do for the rest of the day, you know what to do. Like, subscribe, and share DS Learning Finance. Whoa.
Whoa.
Bye.